All right. We're back at it. We are back at it. I'll make sure everybody knows that we're back. About to read the disclaimer, the disclosure. So, we got to kick that off before we get started. Before we get started. All right. So, got to have that disclaimer, got to have that disclosure. And of course, to kick it off. All right, disclaimer, disclosure. Please note that the following is not legal advice and is provided for informational and educational purposes only. Investing in securities carries a high degree of risk and can result in the entire loss of your investment. You should consult with a qualified financial advisor or legal professional before making any investment decisions. The information contained in this presentation does not constitute an offer or solicitation to buy or sell any securities or other financial instruments. Any opinions expressed in this presentation are subject to change without notice and should not be relied upon as a recommendation to buy or sell any securities. Please do your own due diligence or research before making any investment decisions. All right, all right. So big shout out to everybody that just joined in. We're about to do some live trading. We're about to get into some live trading right quick. Let's take a look. All right, we're gonna look at the overall market. We'll take a look at SPY first, see what's going on. Of course, I gotta. All right, so we're bullish on SPY after having a little bit of chop. Looks like it's gonna go for the 50% for yesterday. So, it's still a little choppy. I would be hesitant to enter in any trades on SPY, especially because it's acting just a little choppy, a little bit choppy. But you guys know, as soon as I find an opportunity to take a trade, I will let us all know, but we're just gonna keep watching the market. So big day today. Nvidia's got earnings. I know I'm never supposed to play earnings. That's a rule that I set for myself. Don't ever play earnings. I've gotten burned so many times, but my most profitable trade has been from earnings, and it has been from Nvidia. So they've got earnings today, but a part of me feels like they're absolutely tapped out, maxed out in terms of how far they've traveled up in this bull run. And unless they announce something crazy today, like uh an insane amount of chips that they sold or some kind of new technology that hasn't been discussed before. We'll see. It looks like there was a crazy drop yesterday. This is Nvidia looking at that 30-minute chart. It looks like it's been in this range since yesterday and stuck down here. So we've got earnings reporting for Nvidia today after hours on the market close, and it's stuck in this little range. So this is what I think is going to happen for Nvidia for today. It's going to stay pretty much in this range all day. It's not going to do too much until earnings gets released after the market close. Everybody's just going to be watching it. Of course, you're going to have people on both sides that are looking to take puts. You're going to have people looking to get calls. So we definitely going to see, if you play earnings, please use caution. Now, here's one thing that I've learned in terms of playing earnings. Just to hold on, folks. Hold on. Give me just a second. All right. I meant to hit record on my phone just so I can record this for the PIU community. But here's a trick or a tip in terms of playing earnings that I've learned, right? Especially when you get burned playing earnings, you should play the momentum, especially for these companies that have a large push after the next day of earnings. So you're talking about companies like Nvidia, companies like Netflix, companies like possibly like Google or Microsoft, like the big ones, right? So don't jump into the earnings play before they release their numbers. Jumping to the earnings play after they release numbers. And if we see that market sentiment is not impressed, right? If they miss earnings, then what you want to do is take that momentum, take that trend down, take it all the way down, but wait until the earnings numbers is released. And if they beat earnings, right? So in this case, we're looking at Nvidia. This is the 30-minute chart. Let me move it over a little bit. They had a drop yesterday. If Nvidia beats earnings and the market likes it, so there's bullish sentiment, then you could jump in and ride some of that continued momentum. But one thing that you want to be very careful about is jumping into an earnings play before the numbers are released. Now, there's a reason for that. There's a bunch of reasons, right? You could be wrong, but where I've gotten burned is not only did I get into an earnings play and I was right about either the company beating expectations or missing expectations, but you have implied volatility, you got IV crush. So even if you're right, even if you pick the right direction, your options contracts will still get slapped. They'll still get like just smashed because of the IV crush. So this is why you want to wait for those contracts to level out and then catch that momentum. So just a little heads up on the earnings play, especially if you're looking forward to NVDA for the earnings. Now, of course, all of my lives are all about the beginners. So if you got any questions or any ticker symbols that you want me to look at, please, please, please drop them in the chat. In the meantime, in between time, we're just going to be surfing through the market to see if we have any plays. Now, I've been hearing and watching. Let's take a look here at Alibaba. We got Alibaba on the 30-minute chart. For those of you that are new, I like to trade on the 30-minute time frame. What that means is every single one of these candlesticks represents 30 minutes of time. So Cameron Randolph says, let's take a look at Apple. I actually have puts on Apple. I kind of posted that on the story. So let's take a look right quick. Let's take a look. Let's take a look. Is this you Apple right here? Yes, it is. All right. All right. So we got Apple. Looks like I may have been just a little wrong on my assessment. Again, this is the 30-minute chart. So each one of these candlesticks that you see represents 30 minutes of time. We've got some moderate bullish sentiment on the day so far for Apple. It still is in this kind of like downward trend. Let's take a look at the daily chart. And it isn't plotted here, but I'm going to show y'all what I was seeing in terms of puts. So Apple had came back down into the support area. I'm going to zoom it in and bring it in. And maybe y'all can see it, right? Let me squeeze it in even more. Jeez. All right, so here's the daily chart. Now, can y'all see that this area here, I'll draw it with the rectangle. So here's something for my beginners and the new folks out there. If you're new to charting and you're new to trading, one thing that you'll learn about support and resistance, how most of us learn, is to draw like your lines, right? A line at a price point for support and resistance. And one thing that I found to be a lot more helpful for my trading is to draw a range or an area, basically a rectangle or a box. So if y'all could see on my screen, we're looking at Apple on the daily chart. This is why I posted yesterday or the day before about potential puts on Apple, because we've come into this support kind of resistance range. Now, if you're new to trading, I want you to write something down. Grab a pen, make notes, or your computer, whatever the case may be. I want you to write something down that support becomes resistance and resistance becomes support. There's probably a lot of us that already know that, but that's just a little tidbit for our new traders out here. So let's go back. I want y'all to take a look at something at what I was looking at potentially for Apple. What we saw here back in October. So back in October on the left side of the screen, Apple came into this kind of support slash resistance area, and then it crashed down. It came back up, kind of retested, if you will, had a little trouble, but then it blasted out, came up to some all-time highs, came back and crashed back down. And look what happens. Just like I said, support becomes resistance and resistance becomes support. So where it kind of struggled to get past, it now is struggling to get below. This is a support area. So now that we've touched the support once, it came back down, touched the support twice, bounced up, touched the support a third time, a fourth time. I'm thinking within the next couple of days, however long, you could do like a long-term swing trade, maybe get some contracts that expire a month from now, maybe late March, to have puts when Apple breaks below this area right here. All right, let's chat with Roxy. Says FICO stock is really good at the moment too. Check it out. So let's check out FICO. Now, let's chat with Roxy. Are we talking about for the trading, for the long term? I'm down to explore both. I always like to look at stocks both from a trading perspective and a long-term investing perspective. So somebody just asked me the other day to give them my favorite tickers. And of course, Apple is on there for long term. So you can't knock Apple. It's just that in this immediate short term, between now and March, I think we're going to have some pullback, some drop down, and puts may be the way to go. But Cameron, I'm hoping that you saw what I see there. If you want me to take a look, let's chat with Roxy. Says buying. Let's see. Let's see. Let's go take a look at FICO. I'm going to close a couple of these that I'm not quite opening and using. I got the OG iMac from almost 10 years ago. So sometimes getting a little choppy for you, boy. All right. So let's chat with Roxy. Says buying. Let's take a look at FICO. Now, when you say buying, do you mean like short-term trading, or do you mean like a long-term investment? Are you talking about buying and selling it, for a quick profit within the next month, the next however long? Or are you saying, hey, let's look at FICO for a long-term holder for 1 year, 2 years, 3 years, something like that? Let's go ahead and bring up a new chart. New chart, yeah. Oops. All right, FICO, buying long-term investment. Okay. So let's chat with Roxy. Let's look at FICO for a long-term investment, which is a good one. This is a good one for a long-term investment right off the back. I had this on my watch list not too long ago. So when it comes to long-term investing, I'm going to tell everybody this is exactly where I start every single time. This is just take these notes. We're talking about a long-term investment. So when I got a friend, when I got a homegirl like Roxy, who hits me up and is like, yo, G, check out this company, check out FICO, check out this ticker symbol. The first thing and the number one thing that I do every single time when I hear about a new company, when I'm researching for a long-term investment, is to go to the website seekingalpha.com. And the reason why I go to Seeking Alpha is because they make it really easy to get a summary of the company's financials. And it helps me to do my analysis real quick. So we're going to seekingalpha.com. This is for a long-term investment. We're looking at the ticker symbol FICO, FICO, or the Fair Isaac Corporation. A lot of us know that, of course, when it comes to credit scores and things like that. So let's give this a moment to load up because for whatever reason, the internet is chirping. All right, let's take a look. So we're at seekingalpha.com. Now I can tell you from the chart that I have behind here, currently FICO is at about $1,234. Looks like we're in somewhat of a bearish trend. We've got a double top. Now, on a double top, Cameron says, yeah, I got 60 shares of Apple at an average of 85, and then future calls on Apple. That's why I said Apple. That's what's up, Cameron. I hope you saw that there. Just a slight retracement is what I see. But of course, long term for Apple, you can't go wrong. Looks like you got a good average price for sure. For sure, for sure, for sure. 60 shares at $85 a share. Look at this. Hold on, really quick. I'm bouncing all over the place, but let's give a shout out to Cameron because if he got 60 shares of Apple at $85 a share, and Apple's currently at $182. Cameron is sitting real nice right now. So big shout out to Cameron. All right, so y'all couldn't even see that though, could you? All right, so I wanted to show you over here on the right hand side of the screen. You can see the Apple's at 182.36. Okay, back to FICO. So just really quick, if you're into chart patterns, candlestick patterns, it looks like FICO is forming somewhat of a double top, which is this M shape here. And what that means is, should the price get to this support area here, where we see this kind of flat line, the middle of the M, right, this down point, if this price comes down here and it breaks below, then you definitely want to take puts and possibly ride it down to this area. That's just a short-term trade on FICO. Now let's take a look. So here we are. Like I said, when it comes to long-term investing, the first thing that I do all the time, every time when it comes to long-term investing, if somebody wants me to take a look at a ticker symbol, I'm doing my research. I go to seekingalpha.com and I go to this website because it summarizes a company's financials pretty easy just to quickly understand. So I always start here. Now we can see in the past 1 year, FICO has returned 85%. So that's dope already. In 1 year, you're almost up 100% on your investment. In the past 5 years, 402%. In the past 10 years, you're up over 2,000%. So they got a long-term track record for good returns on your investment for the ticker symbol FICO. Now, something I want to remind us all about is this. Never let a company's share price, right? Because FICO is currently over $1,200 a share, prevent you from investing. You may convince yourself that you need to get a full share. You don't. Most brokerages allow you to buy fractions of a share or pieces of a share. So don't let a share price stop you, because when it comes to stocks and stuff like this, we don't value the same way that we think that something else is expensive, like a car or a phone or a computer or a tablet. So you might see this number and you might think like, damn, that's too expensive for me to get. Well, that's not the case how it works with stocks. So always keep in mind that you want to be able to get fractions of a share or parts of a share if your broker allows you to, which most of them do. So the key here now is we see that they've got a good return over the last however many years, at least 10 years. Let's do a quick year to date. Even year to date, almost 2 months in or 3 months in, depending on how you look at it, it's still up 6%. So in the immediate short term, we've got what looks good for FICO. But now we want to take a look at their financials. We want to take a look at the financials right quick. And, I got to kind of squeeze this down for the phone so y'all can see it. I don't want to do all of this Seeking Alpha. Why is this in the way? All right, so what we're looking at is the financials for FICO. Yo, what's up, Ryan Fox? Thanks for coming through, my guy. All right, so what we're looking at are the financials right quick for FICO. Now, I'm going to keep it a buck with you guys. I do not care about total revenues and even less, or I really don't care about these two metrics, revenues and gross profits. Now, of course, we want net profits, but don't let total revenues and gross profits throw you off. You'll see companies report $50 billion in revenue. And to me, that really doesn't mean anything. Why? Because if I found some widgets, right? Let's just say I bought $10 million worth of widgets, and then I sold those widgets for $10 million. I can now tell you I did $10 million in revenue. And now you're going to be thinking, oh, snap, G's balling, or G's know how to run a business or whatever. No. So revenue just means they made these money from transactions. It doesn't even mean that they have profits at the end of the day. So the first metric when we're looking at financials is to look at net income. So that's one thing why I like to go to Seeking Alpha, because it makes looking at these financial numbers very easy. And what we can see here, going back to 2019, FICO, ticker symbol FICO, that's Frank, Eileen, Charlie Oscar. Look at their net income. So this net income has been growing since 2019, and even dope because it's grown through the pandemic. I always put special emphasis on 2020, right? So in 2019, it was at 192, 236, 392, 373, 429. So for the last 4 or 5 years, FICO, the ticker symbol, has net income increasing. So cool. Now we've got return on our investment when it comes to our shares, right? Getting in at a certain point and getting a percentage profit return. We saw that. Now we see that they're profitable, net income. So after their expenses and fees or whatever they got to pay for, their net income profit is good. Now, the next thing we want to take a look at is their free cash flow. That's another very, very important metric that you want to look at when you're talking about long-term investing. So we want to take a look at free cash flow, which if you're on Seeking Alpha, you're gonna click on cash flow right here. Let me move this over a little bit. And we want to look at, oh snap, the fan just went off. We want to look at cash flow. And where are we at? We want to look at specifically, here we go. You want to look at free cat. No. Where is it at? These two right here. You want to look at levered free cash flow and unlevered free cash flow. And the difference between the two is one of them accounts for their debts, their loan obligations, and the other one doesn't. But just like their net income, simply all we want to see is that their free cash flow has grown over the years. So their free cash flow are these two columns here. And we can see that for the most part, it's been pretty steady and been pretty good. It's actually grown just like their net income. So free cash flow has gone up from 2019, 200 million, 285, 377, 424. So they're teetering on $500 million in free cash flow and continued growth. So now the numbers are looking very, very good, right? That's just from a surface level. Numbers are looking good. And just at this surface level, I would be looking to either at a minimum add FICO to my watch list or dollar cost average in and start buying shares. So big shout out to Let's Chat Roxy with shouting out FICO. Now, the next level of this research that you want to do is get yourself familiar with the company. So this is where you would go to the actual company's website, read about them, see what services and things they offer, what products they produce, whatever the case may be, and understand or get an idea like, yo, are these products and services something that I rock with? Do I believe that there's going to be a future for them? And so we could take a quick look, and I won't spend too much time because I know we're supposed to be doing some live trading. So I'm going to get back to the charts, but I do always want to take a look at symbols when y'all drop them in the chat. There we go. Let's see. We just want to look at their summary right quick, which for some reason is not on here. Let me see. All right. So I know it's not quite fitting in the camera on here, but I'm going to read it. It says what the hell? Fair Isaac Corporation develops analytic software and digital decisioning technologies and services that enable businesses to automate, enhance, and connect decisions in the Americas, Europe, the Middle East, Africa, and the Asia Pacific. The company operates in two segments, scores and software. The software segment provides pre-configured analytic and decision management solutions designed for various business needs or processes, such as account origination, customer management, customer engagement, fraud detection, financial crimes compliance, and marketing, as well as associated professional services. But we all know what FICO is, right? It's related to our credit scores. But what this is telling us is they develop technology that helps companies make types of credit-based decisions. Let's chat with Roxy says, I work for FICO. I've been with them for 7 years. So she's got some scoop for us. She's got knowledge for us. She has got knowledge for us. So big shout out to Roxy for that. All right, all right, all right. So cool. So based off of that, you got to see here. Do we see the FICO score going anywhere? Do we see that this company is going to go anywhere in the future? Clearly not, especially if they've been able to boom after the pandemic. So for sure, big shout out to Roxy. She says, thank you for educating us this morning. Thank you for dropping the ticker symbol FICO for us to look at. That was a perfect example for us to get into. So if you're just joining, if you're just tapping in right now, we're doing live trading, live charting. We just had one of the community members want us to take a look at FICO for long-term investing. So this is a good company that was already on my watch list. Don't let the share price fool you. We're taking a look at FICO. Of course, that's the company that's related to our credit scores. So we've already broken down the numbers. They've had net profit even before the pandemic. It's even grown through the pandemic. Their free cash flow has gone up. So they're up to almost $500 million in free cash flow. And on top of that, they're managing their debt pretty well. So they're good. They're good. And look at this. Just so in the past 1 year, FICO has had a return on investment of 85%. That's just in the past 1 year. So, like I said, good company. Now, back to the charts. Let's get some live trading going on. Like we already know, NVIDIA's got earnings coming up later today. Let me kind of reconfigure the screen right quick so we all can see what's going on here. All right, so this is NVIDIA on the 30-minute chart. This is just what I was looking at and I was telling y'all earlier, right? We had a drop on NVIDIA yesterday, and I believe that we're going to travel. We're going to change. We're going to stay in this range. My bad. We're going to stay in this range all day for NVIDIA because we have earnings after hours. So I don't see there being much activity on this until they drop their earnings numbers, and then we see how the market responds. Let's see. Cameron says, can you read my comment? You don't have to go through the charts and everything, though. Where's your comment at, Cameron? Cameron, you said, yeah, I got 60 shares of Apple at an average of 85 and the future calls on Apple. That's why I said Apple. So on the calls, how far are your future calls, Cameron, on Apple? Cameron, how far are your future calls? I can read your comments if that's what you're asking. I can see the 100 and the praise, the thank hands emoji, the praise hands emoji. So but yeah, December. You got calls all the way to December. You're good, bro. You're golden. You are golden. If your calls expire in December, you're good. That's basically a leap. That's a good swing trade. So Cameron's talking about he's got calls for Apple all the way until December of 2024. He's good. That's a good solid play in my book. I don't think there's anything wrong with that. And on top of it, he's got shares of Apple at a good price. But what we're looking at right now, of course, big shout out to you. No problem, man. But like I said, this is what I think is going to happen for Nvidia. It's going to trade in this range. It might be a little choppy. It's going to be in this range for the rest of the day until the earnings get released, and then we'll see what's going on with the market. It's very interesting, this drop though from yesterday, and I don't know what caused that. I almost think that that might have been like insiders getting out. If you don't know, I'm somewhat of a conspiracy theorist, so this might have been insiders getting out of Apple yesterday. Who knows? Who knows why this just dropped? But like we got a few big drops. Look at this. We got from a couple of days ago after hours, this little drop, and then another one drop. And then when the market was open yesterday, drop. I don't know. Like I said, I'm somewhat of a conspiracy theorist. We know that there's market makers. We know that there's people that manipulate the market, obviously, right? Now I'm wondering if this was them getting out of Nvidia kind of at the top, securing profits before we might have some negative reaction to the numbers. And remember, even if they beat earnings and they beat revenue per the revenue share, and the market still could react negatively to it. This might be the time where the market makers decide to take their profits and get out because Nvidia's ran up so much. But I actually have not traded. Most of the time I go live on TikTok and I do my live trading. And it's usually like after I've gotten one or two trades in. That way I can go over the trades and my thought process. But so far I haven't seen anything at all today. The day's still young. It's only, we're only a couple hours into the market being open. But I don't quite see anything just yet. This is SPY, 30-minute chart. Same thing. We're just kind of in this kind of small range, a little choppy. My TikTok is the same thing, Cameron. It is Curtis G24, same name. So I'll see you on TikTok too. Yep, same name on TikTok. I usually it usually gets very lit in my lives over there. So you'll have a good time, man. It gets lit. People are like active in the comments, sharing a lot of useful information. They're sharing a lot of tools, a lot of resources. That's one thing that I do love about what I've cultivated in terms of my audience on TikTok. Like once I go live, everybody's sharing, everybody's helping, and that means like it's so dope to me. Super, super dope. But yeah, so far today, I'm not seeing any plays. Look at Google. Google's running up. We got some bullish activity, bullish sentiment on Google. It's broken yesterday's high. Yes, indeed. Yes, indeed. Looks like Cameron just followed on TikTok. Is that you right there? The best cam? I see you. I see you, man. The best cam. The best cam just popped up. TikTok is I mean not TikTok, but Google is running up. I got you. And when I get on TikTok, I'm gonna follow you back. I just saw it, bro. I appreciate it. Yo, yo, yo. We're just doing some live trading. Big shout out to Sharaven for joining. I appreciate you, Cuzzo. So right now we're looking at Google, and I would kind of be looking for some indication. Like if I saw a good indication that Google's going to have a pullback on this run up right here, I'll be looking for puts. So I'll be keeping my eye on Google mainly right now because that is what has been the most directional. Everything else that we looked at so far has been choppy. This is QQQ, is just traded in this range, choppy. Here's SPY in this range, just kind of choppy. So right now I got my eyes on Google for a potential play. Take a look in that Apple. Like I said, Apple's in the support range. Already took a look at it earlier. My thoughts are if it breaks below this kind of 180 area, then you should we might be looking for a little bit more of a retracement just for the short term to get some puts on Apple. Let's take a look at Amazon. I'm actually gonna get off of this kind of split screen. Wow. All right. Amazon 30-minute chart looking a little choppy to me as well. Let's see. Amazon broke above yesterday's high, which is this white line right here, and then came right back down. I've been hearing that Alibaba is lined up for a good swing trade to the upside for calls. We've got this gap up. We've got this strong bullish sentiment. I don't like to chase trades, but another trader that I follow, he is in swing trades for Alibaba. He was saying that if it breaks below $75, that he might be getting out of it. But of course, Alibaba is above the $75 mark. It's at 75.53. Let me kind of move this in so we can all see the prices too. All right. I'm gonna keep it a buck with y'all. Like always trying to navigate this on the screen is always a little weird. Yo, 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 thanks for joining. Thank y'all for joining. If y'all do me a favor, like the live and share it with your peeps. Any other ticker symbols? We took a look at Apple. We took a look at FICO. Of course, I broke down NVIDIA. NVIDIA's got earnings today. So just proceed with caution if you are in NVIDIA. Anything can happen. I honestly think anything can happen with NVIDIA today. So far, the only potential play that I can see is going to be Google for me. For me, that's the only play that I see. So right here, this is Google on the 30-minute chart. It's been straight bullish all morning. We had this red candle, but it pointed up. So Google is very bullish. And what I'm looking for is some type of signal or sign that there's going to be a pullback on all this bullish activity. All right. So what's going on with Google today? Market Clubhouse morning memo. Google brings Gemini AI models to enterprise tools. Oh, that was 1 hour ago. Okay. Man, we're in this era. Like, if you just mention AI, it's still in there. I don't know if you remember last year when companies just mentioned AI, you just straight up stock went up, and it's still remnants with that, right? If you mention AI on your stock, you're gonna get a little bullish boost right there. All right, all right. Let's see, let's see. So yeah, like I said, the main thing that I'm possibly looking at for today is just some type of retracement or pullback on Google for a quick scalp. Now, while I'm here, I always want to give y'all value. So if you're new to trading or you're interested in options trading, specifically, because that's what I do, there's a whole lot of different markets or indices or securities or different arenas that you can trade, right? You've got options trading, you've got general stock trading, you've got futures trading, you've got currencies, Forex, and you've got commodities. I like to trade options. That's all that I've ever traded. A lot of people have told me to take a look at getting into Forex or futures and things like that. And I might sometime in the future, but I don't feel like I'm at a position yet where I've completely mastered options the way that I want to. Like I want to be like a wizard at it. I want to be crazy good at options. So I'm still in here learning my way and get my journey on when it comes to options. Now, with that being said, if you're interested in options trading, I'm going to show you the number one indicator that I use every single day. Let me show y'all. The number one indicator that I use every single day is this one right here. It is the SSS 50% rule indicator, and it's created by a young lady by the name of Sarah Strat Sniper. And the Strat, because her name is Sarah Strat, the Strat was actually created by a guy named Rob Smith, who passed away unfortunately last year. But Sarah Strat Sniper, she created this indicator that automatically plots out the previous day high, the previous day low, and then right in the middle, the 50%. So that's what we see here on my screen. Let me bring it back up and so we can see it. So this top white line was yesterday's high, which you can see over on the left-hand side of the screen, my bad. And then right here in the middle, this blue line was the 50% mark of where the stock traveled yesterday. And then down here, this white line was the low. It looks like it's a little off, but it marks out the low, the high, and the mid for you each day from the previous day. And I use this every single day because I've noticed, at least in my trading, there's usually some respect given the next day to these levels, either the top, the middle, or the bottom. So I always like to mark those out. And if you remember what I said at the beginning of my live, support becomes resistance and resistance becomes support. So those all go hand in hand. Those all go hand in hand right there. So I'm kind of looking at Google right now, just seeing. I would like to see like a nice strong candle, a bearish candle breaking below the high from yesterday. That would be maybe a signal right there to scalp some puts on Google. So that's what I got my eye on. That's the only potential play that I see so far for the day. Let's take a look. Here's Baba, Alibaba at the 30-minute chart. Let me see what else is out there. Let's see what else is out there. All right. All right. Yo, thank y'all for joining. Thank you for joining. I appreciate every single one of y'all for coming through, helping your boy out. Just do me a favor, drop some ticker symbols, some things that you want to take a look at in the chart. That way we can chart them out together. I'm going to scroll through here, all these unnamed charts that I got. Let's take a look at Tesla. Let's take a look at Tesla. Let's see here. All right, so we're taking a look at Tesla. This is Tesla on the 30-minute chart. Nice little bearish symbol. So I'll be looking for something like this on Google to indicate to take puts. So this is the perfect example right here. We had like this bullish run up, if you will, on Tesla. We had this nice bearish signal, this bearish candle. This is a shooter, if you will, or an upside down hammer. So if we can get the same thing, which it looks like Google's forming, coming out to be, if this candle can stay bearish and close bearish, I'll be looking to possibly take some puts on Google. So let's see. Let's just see how this plays out. I'm going to put Tesla and Google next to each other. Let's take a look at futures to see what's going on. Futures looking a little crazy right here. All right, all right. So currently in this bearish mode. All right, currently. All right. I am Renee. Alicia says super duper green and not savvy with the options, but I just recently purchased Waste Management. Would you be able to analyze if you have time? Of course. Yes. So what I'm looking for, just before I go over to Waste Management, is I'm looking for this candle right here on Google, right here to end bearish, right? Basically, I want this candle to close red, a strong red, and that would be a signal for me to possibly take puts to the downside, a quick little scalp on Google. But I am Renee. Alicia wants to take a look at Waste Management, which is a company that I did have in my long-term portfolio that I am going to add back. And so, like I said, if you were on my live earlier, or if you knew, when it comes to long-term trading, long-term investing, whenever somebody wants me to take a look at a ticker symbol or a company for research, I always start at Seeking Alpha. And the reason why I start at Seeking Alpha is because they make summarizing the company's financials very easy. So we'll take a look at Waste Management, ticker symbol WM as in William Mary. No, I don't want to add this to the portfolio right now. Seeking Alpha. Waste Management currently at 203.44. All right, let's take a look. So in the past year, it's up 33%, which is really good to me. I know we're in this era where like people only care about things that are 100% or more. Don't let that kind of stuff blind you. This is saying right here that if you bought $100 worth of Waste Management, just 100 bucks 1 year ago, that $100 turned into 133. That's good money right there. That is really good money to not do anything. All right, past 5 years, you're up 100%. Look at that. Just really good. Let's check out the year to date. 13% year to date. So meaning that if you would have bought Waste Management just a couple months ago at the beginning of the year, about $100 worth, with you doing nothing, that $100 turned into 113. So far, we're looking at some good returns on Waste Management, just tip of the iceberg surface level. So that's good. I'm still intrigued. This is kind of how I take my baby steps through, one step at a time. Now, the next thing we want to look at, of course, are the financials. And so, like I said before, right? Don't let total revenue fool you. We don't care about total revenues. We really don't care about gross profit, because all gross profit is how much profit do we make before we account for our expenses and things like that, right? And that's not what we're caring about. It's kind of like the same thing with our paychecks, right? Do you care about your net paycheck or your gross? Obviously, the gross is before your benefits come out, taxes and all that kind of stuff, and that's not what impacts you. That doesn't impact your daily life, your gross pay from your job. It's your net pay. So what we want to do is take a look at net income, which is synonymous with like true profit, if you will. So let me go ahead and bring this over a little bit so we can all see. And it's looking good, right? So in 2019, boom, they're at 1670. And of course, these are in the millions, right? Because we're looking at like an accounting statement. So these are in the millions. And then boom, in 2020, they had somewhat of a pullback. And I usually always give a company a pass if they have a pullback in 2020. And then, of course, they started building right back after 2021. So whenever I see a company have a dip down in any category in 2020, we all know that was the pandemic. So I always like cut them some slack and always give them more kudos, because they quickly bounce back the next year. So we've got this upward trend on their net income, their profits. Wow. So this is 1.8 billion, 2.2 billion, 2.3 billion. So Waste Management is looking really good from a return on your investment standpoint, right? In the short term, if you bought shares at the beginning of this year, if you bought shares last year, if you bought shares 5 years ago, you're up on your money. And the company's net income has been growing since 2019. Good, good, good. So far, all good, all good. Now, the next component that we want to take a look at is their free cash flow. So if you go to Seeking Alpha and you check out this cash flow button right here. Now, all of these numbers are important. Don't get it twisted. All of these numbers are important. I'm just showing you guys the main ones that I focus on when I'm doing my very start, beginning, tip of the iceberg research. So all of these different ones are important, and they're all important in different ways, all depending, and this is just my own opinion, right? These numbers are all important depending on the type of investor that you are. Now, the ones that I've spotlighted are general for investing, but also somewhat of an emphasis for those of us that are dividend investors. And Waste Management does pay a dividend. So I'm going to go down here and we want to take a look at their free cash flow. We want to look at their levered free cash flow over here on the left-hand side and unlevered free cash flow. So what this means is one metric takes into account their debt and obligations, their loans that they have to pay back, and the other one takes that out. It doesn't account for their loans and payback. So just imagine like this, right? You get paid your paycheck and you want to know how much cash you have left over. One of these metrics says, well, this is how much cash you have left over if you don't account for your student loan or your credit card bill or something like that. The other one says, this is how much cash you have left over if you do account for your student loans or your credit card bill. So if we take a look over here, going back to 2019, let me make sure I got the two columns right here. So it's these two right kind of in the middle. So in 2019, free cash flow, 1.6 billion, 1.4. That dropped down in 2020. Like we said, we always give a pass because 2020 was crazy. Then they shot way up in 2021. Then it's gone down a little bit in 2022. It dropped down even more in 2023. And they're trailing 12 months. So if you're looking at like some financials and you see these letters TTM, that stands for trailing 12 months, kind of like an estimate for the last 12 months. And so it's about the same. Now, we have a dip and we want to understand why is their free cash flow going down, because it's always a good sign when a company's free cash flow is going up. You want to see an upward trend the same way we saw the upward trend with the net income. And so what we want to do is continue to investigate why is their free cash flow going down. I am. Renee Alicia says, also, I know this is supposed to be live trading. So if you want to get back to your original trading content, please do. Now, for sure, I'm all about giving value to the people. So whatever people are asking for in the chat, that's all I'm about. If nobody asks for anything, then I go back to the live trading. But in the meantime, in between time, we'll keep chopping down and breaking down what's going on with waste management. So we're going to make a side note that in our analysis, in our investigation, we want to understand why is waste management's free cash flow going down. Usually you'll see this happen with companies when they're expanding on projects, or there might be a product or a service that isn't doing too good in a particular market or something like that. But we're going to investigate that later. I just want you to make a note in your mind or even on a pen and paper that we have to investigate why is their free cash flow starting to go down. But overall, we're still in good shape for waste management. Now, like I said, waste management is a dividend paying company. So for us dividend investors, or maybe they aren't a dividend paying company, maybe they were. Oh, wow. So Seeking Alpha used to have the dividend scorecard free. That's one thing I will say. For anybody that's on the live right now, we are entering an era where all information, especially good quality information, is going to come at a cost. It will be behind a paywall. So I'm going to go off onto the side on a little tangent right now, but this is just my overall, like, kind of what I've seen in years past. So we went with the widespread of the internet. We went into the information age, right? Information was freely, readily available for everybody. And with that lead into the information age, it also gave way to the lack of privacy age. Privacy kind of disappeared. Now we are entering into the cost of information age. So this is just my kind of theory and hypothesis. So if you want to find good quality information, it's going to be more and more costly and harder to find it, because people that have the quality information, like Seeking Alpha, they're adding more and more paywalls to get to it. So they used to have for free the dividend scorecard that gave you the whole breakdown on the dividend health of a particular company. It's been a while since I've checked, so it looks like they put that behind a paywall, but we'll get back to that in a little bit. Now, another thing for you, Renee, if you're still on, you want to jot down this website, tipranks.com. Now, TipRanks has a bunch of uses on it, but the number one thing that I use it for is an analysis forecast. So what TipRanks does is it summarizes or it collects a bunch of different stock analyst predictions for a particular company, and it gives you a summary. So this is tipranks.com. We want to look at waste management. We're going to go over to forecasts. And so this is super cool because what it tells us, the current stock price for waste management right now over here on the left-hand side. And then it shows us a forecast. So out of 19 analysts, and I always like it when they have a bunch of analysts, this number will always change depending on how many analysts are covering the stock. But out of 19 analysts, 9 of them are saying waste management is a buy right now. 10 of them are saying it's a hold, meaning don't do anything. And then 0 are saying sell. So to me, that's very good. That's bullish sentiment. Then over here, and you got to take this with a grain of salt, right? Based on averaging all of the analyst estimates, they're saying that within the next 12 months, they expect waste management to be at $208 a share, which is a 2.5% upside from the current share price. Meaning that if you bought waste management literally right now today, in 12 months, you should be up 2.5%, almost 3%. Now, to get us more of a breakdown, here's what the analyst averages look like. So on the low end, you have some analysts saying that in the next 12 months, waste management could be down to 175. In the middle is 208.61. That's what we saw. But on the high end, there are some analysts that are bullish on waste management. They say, hey, based on what we see in the next 12 months, waste management will be up to $230 a share. Now, this is where you want to kind of add different clues and things that's going on in current events and what you know about a particular industry. So here in San Diego, right, there's different parts of Southern California going up to like the North County area where you have to choose your own privatized trash pickup, waste management being one of those companies that you can choose from. Well, there are more and more instances. I was just reading something yesterday about trash pickup in San Diego, where cities and municipalities are going to be leaning on waste management even more. So I have thoughts. My sentiments are that waste management is going to be above 208 61 in the near future or in the next 12 months. Like I said, not financial advice. Like I gave my disclaimer at the beginning, you got to do your own due diligence and do what's best for you. But I've always been kind of bullish on waste management. I've always liked the company. And I could see within the next 12 months, despite some crazy things happening with the economy, right? I'm talking about a recession. We're in the presidential year. We got to keep that in mind too, right? There's that general stereotype or data that says whenever it's an election year, the market always does good. So I'm thinking that in the next 12 months, we could be in this $230 range for waste management. But overall, my analysis is I would, at a minimum, add it to your watch list, wait for a good price point that you feel is good, or jump right in and start doing some dollar cost averaging. That's what I would do. Okay, so back to trading. Like I said, I'm waiting for Google right here. I am waiting for Google. Is this candlestick right here is not turning out to be, of course, you're welcome, no problem, for sure. So of course, this candle is not turning out the way that I want it to be. And this is another lesson learned. If you're new to trading, depending on how your strategy is, you always want to wait for the candle to close. And this one did not close strong the way that I wanted. But it could be an instance. This could be that signal that we were looking for to take some puts to the downside on Google. We'll see. This candle just wasn't strong enough for me. I wanted a strong bearish candle, a strong red candle pointing down, and I didn't get that. So I didn't enter into a trade. But here we go. It looks like we're tipping over a little bit. Google's looking like it wants to push down. Let's see. Yes, indeed. Yes, indeed. That's almost I don't know. I don't know. Might want to take that. Might want to take that right there. Yeah, might want to take that, especially if it breaks below. Oh yeah. Downside. Downside. Like I said, I was looking at it and that's what it was looking like. Of course, you got a little volatility. It's just that this candle wasn't strong the way I was looking for it to be, but I'm thinking, look at that. Yep, look at that. This is kind of what we was looking for. The same thing that happened with Tesla, right? We had this bearish candle down, that signal just to ride that all the way down. And I'm thinking the same thing may happen with Google right now. Yes, indeed. Yes, indeed. It's broken yesterday's high, so this might be a level of support though for Google. You never know. Mm-hmm. All right, all right, all right. Taking a look, taking a look. Yes, indeed. Yes, indeed. Almost would have took that. Almost should have took that right there. It's all good. Look at that. Coming on down. That would have been a solid scalp right there. Boom. Don't need to be greedy. Bow. Yes, indeed. Yes, indeed. All right. All right. Google coming down. Let's take a look at SPY. Look at futures real quick. A little choppiness on the futures. All right. I'm gonna hop off because I realized that I don't even have myself set up to take a trade while I'm live on my phone to be able to navigate over to Robinhood or whatnot. But I appreciate everybody for rocking with me today. Of course, if you're in PIU, I got this recorded, so it'll go up as a recording for everybody to check out if you didn't catch the live. But I'll tap in with y'all. All right, peace. Let me slow down just to say one more thing. Whenever we have a three, that's a new broadening formation because we made a higher high and a lower low. So it's the creation of a new range, almost like a reset of sorts. So when you, hopefully folks are able to follow me here, that when you create a new range within the previous one,